Crypto accounting. In this video, I want to look at what you should expect from an accountant and how you can help your accountant make sense of crypto and NFTs. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, then please subscribe to the channel. Press the like button, it helps me and the channel. So crypto, what's the problem with crypto? Well, crypto is big to start with, and a lot of accountants actually get quite frightened of it because there's all that fear about it being drug money, and I know that's not the case, but people sort of run, or they charge excessive fees, and actually within crypto most of it is very simple transactions that accountants should be used to. But there are things that you can do to help yourself. So accountants should understand that if you're buying and selling cryptos, it's just like buying and selling stocks and shares, and there's a capital gains tax issue. Now, I think the peculiarity of what people do very often with crypto is there's often a large amount of trading. If you're doing sort of several trades a day or several a week, then the actual bookkeeping becomes quite difficult, because there's a peculiarity in capital gains in the matching of transactions, because first it's matched with transaction on the same day, then you look forward to, if you sell something now, you look forward a month to things that you buy back within a month, and then you look backwards to a pool of everything you bought in the past. And that is actually quite difficult to bookkeep for if you're doing lots of transactions in the same thing. And the other thing you do need to know is that if you sell, say, Bitcoin to buy or transfer from Bitcoin into Ethereum, that is a tax transaction. It's not just a transaction when you move stuff into fiat and convert it to spend. So, but there are things you can do to help yourself. So I don't think it's fair, and I don't think it's fair on you or the accountant if you just give thousands of transactions for them to go through and do the bookkeeping, because it'll cost you a fortune. And there are apps that will just do that, and what you get is a summary of all the purchases and gains, the profits, the losses, and the income. Because very often, not only do you have profit and losses, also if you staked some of you might have income as well. So you need all of that. If you download that app, get the information, it'll talk to your ledgers. If you've got your crypto on ledgers, it'll extract the information and give a report to the accountant, and the accountant should really be able to understand that and deal with it. So that's about helping you and it shouldn't allow most accountants should be able to do that, although I do know that that people dealing in crypto have had some difficulty in getting accountants to do that, but it really it isn't too complicated. I mean, there are some of the things that go on are a bit out there, so and unusual, because the revenue is trying to keep up, and their guidance isn't necessarily kept up to date with the rapidly changing industry. So if we're not sure about how something needs to be done, the way that can be dealt with is you can say on your tax return, this is how we've done it, and disclose it, because you have an obligation to be open with the revenue. And you can, if you're worried about how transactions should be dealt with, we can write to the revenue and say, look, this is the transaction, this is what we're doing, this is how we're intending to treat it on our tax returns, do you agree? And that gives you the security that it's being dealt with. But you do need to do your tax returns. So there's people say, oh, why do I need to do tax if I'm on crypto? Nobody knows about it. Well, you do need to. First of all, because it's a criminal offence not to, so you should do that really. Secondly, because the revenue can find out, so they actually get information from Coinbase and people like that, I believe. So you need, I believe, I'm not I hope, but I've certainly come across some where it's likely that the information came off the ledger. So you do need to make sure, just from a protecting yourself point of view, and also from the other point of view, that if you want to cash in some of the crypto to use it to buy your Porsche or your Lambo, or to buy a house, or just to clear your credit cards, then the banks, if you're going to put substantial sums into your bank, the banks will ask about it, because they have money laundering, anti-money laundering obligations. And having done everything and have everything displayed on your tax return seems to me like a really good way of making sure that you can prove that you've done everything is legitimate. And getting the history, so it's all very well, oh well, I won't do it, I'll do it next year, but actually you might be wanting to convert this into sterling in 2 or 3 years' time, and you might be wanting to prove the history. Well, believe me, you will want to have accounted for it now in order to have that history in the future. And it shouldn't cost you that much, and it's a bit of hassle. There is tax to pay, but it is a legal obligation. And capital gains tax is at 20. The highest rate is at 20. The highest rate for securities is 20%. So it's not. I mean, it's 20%, but it's not 50%. If you're trading, and I'd say mining is a trading activity, then the tax rates are higher, and you might want to think about the structure that you're doing it in. So that's my sort of update on how you should account for crypto. If you'd like to be kept up to date on future videos, or if you want to discuss it with me, please get in touch. Subscribe to the channel, and if you like if you've liked what I've said, then please press the like button, because it helps me in the channel. Thank you.